Hello friends, welcome to my channel. This is CA Rakhi Agarwal. Today we are going to continue the property, plant and equipment, that is Ind AS 16 part 2. Previously in property, plant and equipment discussed the initial recognition, the objective of PPE, how to recognize its measurement principles, subsequent recognition, its measurement principles. Now in this class, we are going to discuss the exchange of asset, that is the barter system, how the property, plant and equipment is recognized in case of exchange of assets. Means they are not purchasing the assets, they are exchanging the assets against another assets. So how the treatment is done for exchange of assets, how accounting is to be done for exchange of assets in case of barter system. Then we will going to discuss about the depreciation, its calculation, its method. Then we are going to discuss the subsequent, how the company treat its assets after its recognition, initial recognition, how the company will treat the asset at the reporting date. Then we will learn about the revaluation models, cost model. So let's start our topic. So we are starting with exchange of assets. It means how the company, if a company is acquiring any property, plant and equipment against any another property, plant and equipment in exchange of both monetary and non-monetary assets, then how the company will make a treatment in its books of accounts. So if the property, plant and equipment is acquired in exchange for other non-monetary assets or for exchange of combination of monetary and non-monetary assets. Combination of monetary and non-monetary assets means, monetary means we all know that cash, and non-monetary assets means if a company exchange any land, if the company is exchanging any land and acquired any another building, so that is the exchange of asset, one asset with the another, and on that company pay some cash also. So that is the combination of monetary and non-monetary assets. This we will explain by example. That is, if an aircraft is purchased, if a company purchases an aircraft in exchange of car and pay some cash also, so they, in this case, the monetary transaction is also there and in the non-monetary transaction is also there. It is a combination of monetary and non-monetary assets, and if there is a commercial substance, then the asset is to be recognized at fair value or depending on the situation. Means if in this transaction there is a commercial substance, we all know that if the company is exchanging any aircraft with the car, that is not a same class of asset. So it has a commercial substance. Commercial substance means if the if any transaction having any commercial substance means any benefit to the company. Like if the company is for I am giving an example, if the company is exchanging one Tesla car whose model number is same and whose features are same, whose configuration are same, with another Tesla car, only the difference between that two car is the color of the car. So it does not have any commercial substance. This transaction does not have any colors commercial substance, because the nature and feature of the card is same, the amount is same, so there is no such commercial substance. But if the aircraft is purchased in exchange of car, so it has a commercial substance, because these two assets having a different nature of use, different class of asset, they are different class of assets. If the if the assets have a different class and nature, then that transaction is having a commercial substance. But if the asset is having same class, same nature, so that transaction does not have a commercial substance. So so in this transaction there is a commercial substance, and if there is a commercial substance, then a asset is to be recognized at fair value, or it's depend on the situation. We will discuss the situation one by one. That is, fair value has to be taken depending upon the situation. What are the situations? Fair value of the asset given or fair value of the asset acquired. We will take either the fair value of asset given or fair value of asset acquired. If fair value of asset is recognized, if you know the fair value of the asset given, or you don't know the fair value of asset acquired, then you will take the fair value of asset given. If you know the fair value of asset acquired and you don't know the fair value of asset given, then you will take the fair value of asset acquired. It means if you know any of the fair value, either given or asset acquired, then you consider any of them, that is given or acquired. It means that if you know any of the value of the asset acquired or given, then that value is to be taken into consideration for recognition of assets, whichever fair value is identifiable. If the fair value of asset is given, that is identifiable, then you will take that for recognition of asset. And if you know the fair value of asset acquired, then that take that value as for recognition purpose. So if both the value is not given, or you don't know both the value, fair value of the asset given and fair value of asset acquired is not clearly identifiable, then what you will do? Then you will take the WDV of the asset given. Means the asset which you are giving, the WDV of that asset is to be considered for the recognition or for of the assets. So and if the both the fair value of the asset given and acquired is identifiable, if both the value is identifiable, that is fair value of asset given you know, and the fair value of asset acquired you know the fair value of both the asset given and asset acquired, then you will take into consideration the value, fair value of asset given up for recognition purpose. So it's mean fair value of the asset given on fair value of the asset acquired. It means that if you know the fair value of both the asset given and acquired, then you will take the fair value of asset given into consideration for recognition of assets. If both the fair value of asset given and asset acquired is identifiable. In barter system, in barter transaction, PP is recognized as a cost only. Then in barter transaction, PP is recognized at cost. Only when there situations are there, when there is no commercial substance, when commercial substance is not present in the transaction, and the fair value of asset given and acquired is not identifiable. If fair value of asset given and acquired you don't know, then you will take the cost into consideration for recognition purpose. And if the transaction does not have any commercial substance, then you will take cost for recognition of the PPE in the balance sheet, in the financial statement. So this is be explained by example. Suppose the red color Tesla car is purchased, whose model number, whose features, whose configuration, all are same, in exchange with white color Tesla car having same model, engine, specification. And then there is a, and this transaction does not have any commercial substance, because in this transaction only the color of the car is different, all are same. So does not have any commercial substance in this transaction. And if the fair value of the car is not identifiable, and the fair value of car also is not identifiable, then recognize that car as WDV of the asset given. Means whatever the asset you are giving, the cost of that asset is to be recognized, not the fair value, the cost. So in the books there is no change because of this transaction. There is no such change because of this transaction. Only there is an exchange of car. Books will be same. There is no such difference because the WDV which we are taking into consideration for red color Tesla, that cost is all taken into consideration for white color Tesla. So there is no such difference in the books. There is no difference. Now the example related to exchange of asset. There is one example we are taking. Suppose A Limited is having a land and building in his books, having a carrying value of 70 crores. A Limited has exchanged land and building whose carrying value is 70 crores. In exchange of that land and building, A Limited, whose fair value is 80 crores, want to acquire private jet at the fair value of 100 crores and pay some additional 30 crores in cash. In this transaction, both monetary and non-monetary transaction are there, and in this transaction there is a commercial substance because the utilization of land and building is not same as that of the private jet. They had a different class of asset, different nature of asset, so they the utilization of land and building is not same that of the private jet. So the nature and class of the assets, both the class of assets are different, so there is a commercial substance. So it will be taken at fair value. So what was the fair value? The fair value of asset given is land and building. The fair value of asset given is that is land and building 80 crores, and the fair value of asset acquired is that is private jet 100 crores. You know the fair value of both the assets, and then so which value you will take into consideration? The fair value of asset given, that is land and building. So 80 crores is to be taken into consideration for recognition purpose and 30 crores is paid in cash. So PP is to be debited, that is private jet is to be debited with 110 crores, that is 80 crores plus 30 crores. 80 crores the fair value of land and building and 30 crores which the company pays as cash. So 110 crores is to be debited by land and building, sorry, private jet, that is PPE, private jet account debit 110 crores, and they will credit the PPE land and building with the carrying amount, that is 70 crores. And balance they had to pay in cash, that is 30 crores. And if any difference of PPE and cash, that is 100 crores and 110 crores, that is to be recognized to the profit and loss as profit and profit on exchange of asset, because any surplus is there or is to be credited to P&L account. Now the treatment of asset at the reporting date, that is after initial recognition of asset. We all know the initial recognition of the asset when the asset we purchase, then we will how we will treat the asset, how we will make the treatment in the books during the useful life of the asset. So this is the treatment of asset at the reporting date, that is after initial recognition of asset. After the purchase of asset, how the treatment we will do in our books, means after its initial recognition, year by year, how the company will treat that asset in its books, that is to be discussed. There are the accounting policies. There are two accounting policies that the company can select to restate its assets. That is the cost model or revaluation model. Either the company can select cost model or revaluation model at its accounting policies. These two are the policies of the company, that is the cost model or revaluation model. These models is to be applied on the whole class of the asset, not on the individual class of the asset. Means the whole class of the asset. Either you follow the cost model or you follow the revaluation model. for the class of assets. Like if you are there's 5 buildings, 1, 2, 3, 4, 5 in different if the company has 5 buildings in different location, but the nature and class of the building is same, that is the office building, and so the that is the same class of asset. So if the company use cost valuation for that class of asset, then they will use for that 5 buildings cost model only. And if there is a factory building that is of different nature and use, and they are using revaluation model on that asset, then they will use the revaluation model only. This is to be explained by example. Suppose if there is a 7 plot of land in different area, plot of land is there, the company has 7 plot of land in different areas, and company has 8 aircrafts, office building, factory building. These items which are there recognized in the balance sheet, that is land having a different nature and use, aircraft is of different nature and use, office building is of different nature and use, factory building is of different nature of, though say they does not belongs to same class of assets. So if there is a 7 plot of land in different areas, 8 aircraft, office building, factory building is there, then if in and there if 3 plot, if in 7 plot 3 plot of land, the company can allow, the company use cost model on that, and 4 plot of land company use revaluation model. Can it be possible? Can it be allowed by the standard? No, it is not allowed by the standard. Standard does not allow the same nature or class of asset to standard, does not allow, as the standard says same model is applied in the same class of asset consistently. So the nature and use of that class of asset, that is land in different area, is of same. So they will use the same model, same policies in that class of asset. Means if they are following cost model, then they will follow in 7 plot of land cost model only. They will not allow to do in 3 plot of land cost model and 4 plot of land revaluation model. That is not allowed by the standard. So standard says that if the nature and class of the asset is same, so please apply the same model policy on that assets. We will take the another example. In 7 plot of land, we will apply cost model. The company apply cost model, and in 8 aircraft, the company apply revaluation model. Is that possible? Yes, it is possible, because these two assets, land and aircraft, having a different nature and use, so the standard allows them to use the different policies. Cost model is applied on land, and in aircraft revaluation model is applied. It is allowed by the standard. So standard can say that the company can be apply, can able to apply different application of model for different class of assets. Now this is the calculation of the carrying value of assets subsequent to the date of the recognition, initial recognition, by using cost model. So there is two models, that is cost and revaluation. In cost model, how we will determine the carrying value after recognition, after initial recognition of assets. Like we will take the cost of asset, then we will charge the accumulated depreciation, impairment if any, and that determine the cost carrying amount of asset as on the reporting date. Carrying value of asset subsequent to the date of by using revaluation model. If the company take into consideration the revaluation model, then what we will do? Revaluation means the company can revalue its asset at a fair value at every intervals of time, at certain intervals, not very frequent, but at every intervals. Like if if in policy or if in the company's policy or terms and conditions it is written that the company can revalue its asset in every 3 years or 5 years, then they can revalue its asset or at every intervals of 3 or 5 years. And if there is no such frequent volatility in the value of the asset, then there is no need of revaluation. Then if there is a lots of volatility in the asset, means suppose the cost of asset, I'm taking just a example, the cost, if the company has purchased, want to purchase a car or want to purchase a land, sorry, I'm taking the example of land. Company want to purchase a land and company just chasing the rate of the land and ask the seller ki what was the price of the land today. So the seller said that it was 50 crores. After 10 days the company again asks what was the price of the land today. So the seller says that it will be 100 crores. So there is lots of volatility within 10 days in the value of the asset. So if the volatility is higher, then the company will recognize, use the revaluation model. And if the volatility, and they will revalue its asset frequently. But if the volatility in the value of the asset is less, then the company can revalue its asset in every 5 or 3 years period. So after initial recognition, PPE to be carried at revalued amount, because at fair value at the revaluation date, the company will recognize its revalued property, plant and equipment at fair value on the revaluation date. So revalued amount on the date of revaluation, they will take the fair value on the date of revaluation. Then they will deduct the amortized accumulated depreciation, then impairment loss if any, and that determine the carrying amount of assets. So if a single item of PPE is revalued, then the entire class of PPE to which that item belongs should be revalued. If one item is revalued, then if the land is revalued, then the 5 plot of land uh, all are revalued. Means if one land is revalued, that the same class of asset all are revalued. Class of asset means a group of asset of similar nature and use in the entities of operation. Frequency of revaluation model, how frequent it will be. Valuation of asset need to be performed every year or in every reporting period. If the major volatility is there in a fair value of the, if the volatility is higher, then it will be done every year, it will be performed every year or in every reporting period. And if the change is significant, and if the volatility is not so higher, and if the volatility is not so major or low, if the volatility is low in the fair value of the asset, then it would be performed, revaluation is to be done at every intervals of 3 to 5 years at sufficient regularity, so that the carrying amount does not differ materially with the fair value of the asset. So it should be performed at sufficient regularity, so the carrying amount of the asset does not differ materially with the fair value of the asset. That's why the revaluation is to be done. Because if there is a major difference between the fair value and the carrying amount, so in order to remove that difference, the revaluation is to be done. Now, treatment of revaluation gain and loss, how the company treats in its books of account, what the standard says about the treatment of revaluation of gain and loss. If first time increase in the value of the asset, if there is an increase in the value of the asset, if the revaluation is to be done for the first time, and if the value of the asset increase from the carrying value of the asset, then what you will do? Create a revaluation surplus. If the same asset, if that asset in the year 1 it will be increased, and in the year 2 it subsequently increase, then also adjust with revaluation surplus. And if subsequently in year 3 the value of the asset decrease, then you will first adjust with the revaluation surplus which you had created in the earlier years. You will adjust with that, and if any remaining balance is there, you will charge to P&L account. This is to be explained by example. Suppose land is purchased on 1st April 2021 at rupees 40 crores. Company has purchased a land on 1st April 2021 at 40 lakhs. The cost of land is 40 lakhs. That is the original cost. And in 31st 3 2022, the fair value of land is 50 lakhs. And in 23, the fair value. So in every year, there is a volatility. The company has decided to revalue its asset, and the company opt for evaluation model. So what the company in first year, the when the land is purchased, the original cost is 40 lakhs, and in second year when the company opt for evaluation model, the value of the fair value of the asset is 50 lakhs. It means it will increase from 40 to 50. So what the company will do, it will create a revaluation surplus. So it will pass an entry like this: land account debit with how many amount, with how much amount, that is the amount which is increased, that is 50 lakhs is minus 40 lakhs, that is the differential value, that is 10 lakhs is to be debited with to land account, and how much is to be credited, that is 10 lakhs, which in which account, in revaluation surplus account. So land account debit with 10 lakhs to revaluation surplus OCI 10 lakhs. And if in next year the amount of the land is decreased, so it will be 50, because in balance sheet we had adjusted the land and make it 50 lakhs, and that 10 lakhs we will transfer to revaluation surplus. Okay, now in next year the value of the asset, the land, is to be decreased with by 30, by how many lakhs, with the value of the land, fair value of land becomes 38 lakhs. It means it will decrease from 50 to 38. Means there is a difference of 12 lakhs. So how the company will adjust? Firstly, the company has created a revaluation surplus of 10 lakhs. So that revaluation surplus is to be debited, because it will be reversed. The revaluation surplus which is created, to the extent of that amount, is to be reversed. So the company reversed the revaluation surplus OCI with 10 lakhs, because the company has created 10 lakhs only. And then the company credited with the land, that is 12 lakhs, the differential amount. And because the company the remaining balance is to be charged to P&L as impairment loss, or company charged to P&L. Loss on revaluation. Now treatment of revaluation gain and loss, we will take another example also. Like if the first time, in previous case, the first time the value of the asset increase. If the company use first time revaluation model, the value of asset increase. So we will create a revaluation surplus. And if for the first time the value of the asset is decreased when the company opt for evaluation, then it will charge to P&L as impairment loss. If the same asset subsequently increase, means in next year if the value of the asset increase, then adjust it with the P&L, and if remaining to the extent earlier debited, and if any, then we will create a revaluation surplus OCI. And if in subsequently it will be decreased, then it will charge to P&L as impairment loss. So this is also explained by example. We will taking the previous example. Suppose land is purchased on 1st April 2021 at rupees 40 lakhs. And on 31st March 2022, the fair value of the land is 38 lakhs. and 31st March 23 the fair value of land is 44 lakhs. There is a frequency though company opt for evaluation model. How the company will make a treatment? In first year when the company purchased, the value of the land is 40 lakhs. In the year in which the company opt to revaluation, the value of the asset was decreased, that is 38 lakhs. So that difference of 2 lakhs, what the company will do? It will charge to PL as impairment loss. It is a impairment loss. So PL impairment loss account debit with 2 lakhs to land account. And the next year, in 31st March 23, the fair value of land got increased by 44 lakhs. So the difference is 6 lakhs. So how the company will adjust? First, the company will debit the 6 lakhs by land account. Land account debit 6 lakhs. What the company will credit? The impairment loss. The company which has created in the last year, in the year 2022. Up to that amount, the company will credit the PLN account, and the balancing amount is to be created as revaluation surplus, OCI. So 2 lakhs is the PL impairment loss, and the balance 4 lakhs is to be credited to the revaluation surplus, OCI. Utilization of revaluation surplus. If there is a remaining balance in revaluation, suppose the company has a two situation. Like if the balance is there in revaluation account and company want to sell its asset and the asset is sold, then what the company will do? What treatment the company will do for revaluation surplus? What the company will do? The company will totally transfer that revaluation surplus to the retained earning. Because जब एसेट ही नहीं है तो आप रिवैल्यूएशन सरप्लस को बुक्स में क्या करोगे रख के? आप उसको ट्रांसफर कर दीजिए रिटेन अर्निंग. और रिवैल्यूएशन सरप्लस इज नॉट अ फ्री रिजर्व, बट when you will transfer that reserve to the retained earning, then it becomes a free reserve. So if there is a remaining balance in revaluation surplus, when the asset is sold out, the balance in the revaluation surplus is transferred to retained earning and it becomes a distributable reserve. It's a mandatory treatment. The treatment is mandatory because if the asset is not there in the books, what was the purpose of keeping that surplus in the books? You will transfer that surplus to the retained earning. This is one case. What was the another case? In case of disposal, you will do the transfer the revaluation surplus whole amount to the retained earning, and the entry you will pass revaluation surplus account debit to retained earning. And if another case, during the life cycle of the asset, if you want to transfer revaluation surplus proportionately to the retained earning during the life cycle of the asset, how you will make the treatment in the books? So every year revaluation surplus is transferred to retained earning to the extent of additional depreciation. Means depreciation on revalued cost of asset minus depreciation on the original cost of asset. It means that the revalued amount, the depreciation which we will do on the revalued amount and the depreciation you will do on the original cost of the asset, the difference is to be charged to transfer to the retained earning year by year basis. Like this is to be explained by example. Suppose the cost of asset as on 31st March 2022 is 20 lakhs and the life of the asset is 10 years. It will be revalued on 31st March 23 by 40 lakhs. So difference, the original cost, the depreciation we will charge on original cost is 2 lakhs. 20 divided by 10, that is 2 lakhs. And depreciation we will charge, the company will charge on the revalued cost of asset is to 4 lakhs. And 4 lakhs minus 2 lakhs, that is the 2 lakhs. That is the difference in the depreciation of original cost of asset minus revalued cost of asset. So that difference is to be proportionately transferred to the retail. Now comes the concept of depreciation. Depreciation is what? Depreciation is charged on the value of the asset, on the carrying value of the its useful life of the asset. Means the depreciable amount of asset should be allocated on a systematic basis over its useful life. Throughout the useful life of the asset, the asset is depreciated or allocated on a systematic basis over its useful life. It is to be depreciated, the asset is to be depreciated on a systematic basis throughout its useful life. So depreciation charges should be recognized as an expense. It should be charged to P&L unless they are included in the carrying amount of another as to P&L as an expense. Every year the company charge some depreciation and it should be charged to P&L as an expense throughout the useful life of the asset. It also, depreciation also shows the consumption pattern of the asset. How the company you consume that asset throughout the useful life of the, why the depreciation, because the what future economic benefit arises from the asset, it should be allocated or depreciated like way only. It should be charged to P&L throughout the economic benefit arise from the asset, throughout the life of the asset which arise the future benefits to the company. So when the asset is idle, then when the asset is kept idle, that time also the depreciation is to be charged. There is no point that the asset is kept idle, we will not charge depreciation on it. When the asset is kept idle means, we will take the COVID example. That time no production is there, no all business are closed down. That time also the asset depreciation is to be charged when the asset is not used. Depreciation is charged when the asset is available for use and not on the put to use basis. Suppose the company has purchased asset, any PPE, any machinery, and bring to its present location and condition, and everything is settled to run the production. But any incident cause and the company does not use that asset, so the depreciation, the company will not charge depreciation on that. The company will charge depreciation on that, because depreciation in Companies Act, it does not says that when you will put to use that asset, then only we will charge depreciation. Put to use concept is on income tax purpose, but in Companies Act, when you will bring the asset to its present location and condition available for use by the management, then at that time the company will start charging depreciation on that. So depreciation is charged when the asset is available for use and not on put to use basis. Means when the asset in its present location and condition and available for use for its operation in the manner intended by the management. When the residual value of the asset is equals to or more than carrying value of the asset, at that time depreciation is not charged, or the company stop charging depreciation on that asset. Means the purchase value of the asset is 1 lakh. The useful life of the asset is 10 years, and you will charge the depreciation up to 9 years. That is 90,000 is to be charged, and the remaining balance is 10,000 is left. At that point there is no that you will charge depreciation on it, because the if the carrying amount, if the residual value, the value which is left in the books, is more than or equals to carrying value, then there is no point of charging depreciation on that asset, and the company will stop charging depreciation on that. At that time the company will not charge any depreciation when the residual value of the asset is equals to or more than carrying value. If the asset is disposed of or held for sale under Ind AS 105, that time also depreciation. If the asset is sold off, there is no depreciation, will not charge on that asset. Company will stop charging depreciation. And if the asset is transferred to other current account as asset held for sale as per Ind AS 105, if the company has transferred that asset to the other current asset as asset held for sale under as per Ind AS 105. That time also company will not charge depreciation on that asset. So this is the concept of depreciation. Can we charge depreciation on component of the asset? Yes. If the component having a major cost, if the component of that asset is having a major cost and different useful life, then that depreciation is to be charged separately with that asset. Like we had taken the example of aircraft and inspection cost. The cost is major and the inspection useful life is different from the cost of aircraft is 85 lakhs and inspection cost is 5 lakhs. So the cost is different and the cost is major. Inspection is to be done at regular intervals, and also the useful life of inspection is 3 years and the useful life of aircraft is 20 years. So they have different useful life. That time depreciation is to be charged on separately on both the assets separately. Like major component or part of PPE whose cost becomes significant in relation to the total cost of the asset should be depreciated separately. Significant cost relation to total cost. Significant cost is not explained in the standard, but the management had made a policy in which they consider that if the 10% of the total cost of the asset is related to the component of PPE, if 10% of the total cost of the asset is related to PPE and having separate useful life, then depreciation on that is to be charged separately. Like we had taken the example of aircraft and inspection cost. If there is a difference, if the major component cost is 10% of the total cost of the asset, means the cost is significant, and the useful life of both the asset is means the useful life of component and the useful life of asset is different, then the depreciation is to be charged separately on the component and on the particular asset. Difference between impairment and depreciation. Depreciation is to be charged on a systematic basis over a useful life of the asset. An impairment is not identifiable or charged on the value of the asset once only at the time of impairment. It will be charged only in once a while when the value of the asset significantly decreased due to any event. Impairment is not predictable, it is uncertain, because we will depreciation is to be charged systematically over the over years, the over the useful life of the asset, but impairment is not certain, it is uncertain, it is not predictable. Like certain ban of the item, the production stop, the company, the government ban that utilization of asset. That time that asset become impaired, there is no use of that asset, so the company, that is uncertain na, the company don't know, so that impairment is uncertain, not predictable, it is once a while. So suppose for example decrease in the value of the car due to accident, so it become impaired, there is no utilization of car, it become impaired. That impairment is not certain, not predictable, so that is an impairment. Method of depreciation. Depreciation is to be charged in three way, like straight line method, WDV method, and unit of production method. Straight line method means the depreciation is to be charged constantly over the useful life of the asset. Constant charge method means when the future economic benefit from the asset is consistent throughout the useful life of the asset, then depreciation on that asset is also consistent, that is SLM method. Straight line method means constant charge method. When the if any asset, if the company get any future benefit from the asset is consistent throughout the useful life of the asset. Means the same production the company is getting from that asset throughout the useful life of the asset, the utilization of the asset is same, then the company use straight line method for charging depreciation. And when the company used WDV method, when the production from that machinery is very high, very high during the first 5 years of the useful life of the asset, but after sometimes after the end of that useful life of the asset, the production goes down in a diminishing value. That time the company, for that kind of asset, company use WDV, means reducing value method. Means if the machinery will provide higher output in the initial year and subsequently the production got decreased at the end of the useful life of the machinery, then the company adopt WDV, written down value method, that is decreasing pattern of the future economic benefit. Means it decrease the future economic benefit of the asset. So the company adopt WDV method. Unit of production method. Unit of production method means the depreciation is charged on the basis of production. How much the company use that asset, on that only the company will charge depreciation. Means on the basis of utilization of asset, the company will charge depreciation. How much the production is produced from that asset, depreciation is to be charged on that. Charge on the basis of production, on the basis of output, depend on the usage of the asset. When the usage is higher, depreciation is to be charged at a higher. When the usage is lower, depreciation is lower. Means it depend on the usage of the asset. When the usage of the asset is higher and production is more, then depreciation is more. When the production is less, usage is less, depreciation is also less. Change in the method of depreciation. If the company change its method of depreciation from WDV to SLM or SLM to WDV, it is not a policy, it is an accounting estimate. When the company adopt any method from WDV to, when the company change its method from WDV to SLM or SLM to WDV, it is an accounting estimate as per Ind AS 8. It is not a accounting policy. Useful life and residual value of the asset are to be reviewed at every reporting date. Means useful life of the asset and residual value of each and every class of asset is to be reviewed at every year at the reporting date. If there is any change in the useful life or revalued asset, the same is to be treated as change in estimates and accounting will be done prospectively. If there is any change in the useful life of the asset, suppose the company has charged depreciation on the particular asset for 3 years. After 3 years, the useful life of that as a company decided to change the useful life of the asset. Previously, the useful life of the asset is 10 years. But after 3 years, the company decided that the depreciation will be charged only for the remaining 3 years, not on the 10 years. Means the useful life of the asset is to be changed from 10 to 6 years. So it's an accounting estimates. It is a change in accounting estimates, and it will be the change will be applied or prospectively, not retrospectively. It will be applied prospectively on the remaining useful life of the asset. So future annual depreciation will be reviewed on the basis of the new useful life. This is to be explained by example. Suppose the cost of asset purchased is 80 crore as on 31st March 2022. At that time, the company will apply WDV method at the rate 10%. After 4 years, the company will change that method from WDV to SLM. And the useful life is 10 years. Then how the company will charge depreciation? For first 4 years, the company will charge WDV method at the rate 10%, that is 80 crores at the rate 10%, that is 8 lakhs, and that 80 lakhs minus 8 lakhs, that is 72 lakhs. 72 lakhs ka 10%, that is 7.2, and that 72 minus 7.2 will become 64 lakhs point 80, 64.8, and in this way the depreciation is to be charged. And after 4 years the company changed its method of depreciation from WDV to SLM. So the carrying value at the end of the 4 years will become 52.488 crores, and that amount is to be depreciated over the useful life, that is 10 years. So depreciation will be 52.488 divided by 10 equals to 5.2488 every year. So depreciation is on, means previously company charged depreciation on WDV, and after that, after 4 years, the company started depreciation on SLM on the carrying value at the end of the 4 years. Retirement and disposals. How the company will treat, means we know the initial recognition when the asset is purchased, how the company will make a treatment of that. Then subsequently, after at the reporting date, how the company will make treatment every year or during the useful life of the asset, a year to year basis, how the company will make the treatment, how the company will charge depreciation, how the company revalue its asset, how the company use the model, which model, cost model, revaluation model, how the company impair its asset, and then after the subsequent at the end of the life of the asset, how at the time of the retirement of asset, how the company will make the treatment in its books of account. If the asset is sold off, and if there is no future economic benefit from that asset, means future economic benefit is when the asset does not have any future economic benefit, because the utilization of from that asset is totally completed, then what the treatment the company will do in the books of accounts. The carrying amount of what the standard says of that treatment. The carrying amount of PPE shall be de-recognized from the books on the disposal when the company sold that PPE, and when no future economic benefit is derived from the use of that asset. If there is no utilization of that asset, suppose in case of ban, government has banned that asset, that time, if the useful life of that asset is fully utilized, useful life of that asset is over, and at the time of impairment, that time no future economic benefit is there. So when the asset does not have any future economic benefit, then how the company will recognize it? Recognize in the profit and loss account as other income, as profit or loss on the sale of fixed asset, that is sale proceed minus carrying value. It recognized to the P&L account as sale or profit on sale of the fixed asset, that is sale proceed minus carrying. Compensation for impairment. What is the meaning of compensation? Suppose government has banned a car, company has purchased a car of 10 lakhs, and after 2 years government banned that car, that nobody can use that car. The government has totally banned that car. So nobody is able to use that car, and the company has purchased that car, and the value of the carrying value after 2 years is 8 lakhs. So, because the carrying value is 8 lakhs and no utilized, the asset does not have any future economic benefit. The company is not able to utilize that asset. So, what the company will do? Value of car down due to some announcement by the government. That car is no more used, and so it becomes an impaired. But the company who makes these car, the company who prepare these car, make a policy that the person who has purchased the car, they will get the compensation. So firstly, they will make a provision for impairment, and when that compensation is recognized only when there is a probability, there is a certainty that it becomes receivable. Then only they will create a compensation entry. So firstly, recognize impairment. The company will recognize impairment in the books because the government has banned the car. The company will make a provision for impairment in the books. The company will recognize only when there is a certainty that it becomes receivable. Go to P&L account. For watching my video. If you like, please subscribe, comment and share my video. Thanking you for watching my video.